No, just do it this way.
So while Andre's sorting that out, I'll just sort of let you know where we're at here. Well, first of all, I mean, it's been a bit of a weird time for me. My wife's away in the UK, which is a rare thing for me. So she's been away for the last 4 or 5 days. And so I've got the kids, and I'm trying to manage the kids, and at the same time, the relaunch of 52 Traders, which has come out just in the last not even 12 hours, launched tradingnut.com, which is the new version. And Andre pointed out to me that I should have mentioned in the video that I sent out to you guys that that's actually free to listen to now. So the podcast is free. If you're a pro member, if you were a pro member, you can still listen to all the 52 Trader episodes, and you'll still get charged as a pro member, but you can happily cancel it and get all the new interviews and episodes for free on the Trading Nut podcast on Apple iTunes or wherever you listen to it, on Android, etc., etc. And then there's a new membership, a gold membership, which you can come on board in September only. So October it'll change, but September only you come aboard for $1. And the difference is, the main difference between Pro and this is you get everything you have with Pro, but you also get a trading robot every single month that I create, and we've got one up there at the moment. It's a really strong robot that you can use to help with some of your manual trading. You get a strategy inside that as well, so you learn the strategy and that sort of thing. So that's what's changed. The main thing that Andre pointed out, I didn't mention in the video, which was a bit of a mess. The fact that I didn't mention it was that the podcast is now free again. So episodes coming up on Trading Nut are all going to be free. The first one was actually fantastic little episode we did a month or so ago, where we went through a letter that somebody had sent in, or an email somebody had sent in, which was basically really, well, I suppose it was just a massive amount of frustration. So listen to that episode. We dissect it, pick it apart, and give a very, very good view on, I suppose it gives a good view on the retail trader and their issues, and the issues that we sort of mostly face when we first start out in this industry. So, Andre, how we got on with muting everyone? I see.
Oh, we're good.
We're good?
Mm-hmm.
Okay. Now, I can't see you, so I don't know if your thing's on or not.
I was picking my nose, so no.
Don't put it on just yet. Okay, there we go. I can see you now. So you're leading it. I don't know if people can see me. Maybe they can see me with in the video window, probably. Oh, there we go. Okay. All right. I couldn't see myself before. Okay, folks. So here we are. So what we're trying to do today is really a couple of things. So I figured that some of you guys may have a few questions on the changeover from 52 Traders to Trading Nut. And then on the same side of things, if you've got questions for Andre, we're going to do a Q&A session, which is part of the Trading Nut membership as well. So you can actually see one of the old ones that he did in there. And then new ones going forward, not just from Andre, but from other traders as well. We'll put them up there. So we'll have these sessions where you basically can ask somebody who's making a living from trading, making money out of the markets, what he does differently from you guys. So you can share your charts. You can share your screens. You can, you can just ask questions, or you can type them in the chat, whatever's easiest for you guys. So maybe in the chat, just let us know if you want to talk, if you've got a question, and we will endeavour to answer it. And if not, if nobody's got questions, we'll just have a chat ourselves and talk. But I recommend taking this opportunity to ask your questions, especially of Andre. And if you've got any pressing questions of the Trading Nut site and the changeover, then let me know. So I'm happy to answer them. So guys, the chat's open. Feel free to raise your hand there, or chuck a question in, and then we'll unmute you or share screen.
Yeah, I would hope that some of you guys will have like the goal to share your screen, because that I can be more effective in helping you that way if you're courageous enough to share your screen, and then that way we can go over like your entries, your exits, things like that. So anywho, that's what I like, but again, it's up to you.
So guys, so look, it really does need you guys to take part to make this happen. So I mean, first of all, can people type in the chat, because I can't actually see anything in the chat at the moment, and maybe you can, Andre, and I just have access to it. You can see stuff. Okay, cool. Oh, we got Dewey on his phone. He's chimed in there.
Hey Dewey, he's part of the group.
Trying to center stage.
Test Rich, I can see it. Farzad, I can see it too.
Okay, cool. The test is coming through.
Hi Cam, off to bed. Will you be recording? Hey Stuart, he's one of the traders in my group as well.
Yeah, we're recording this, Stu. You can go and get some play over there in the UK. I know that. Yeah, so go and get yourself some shut-eye. Okay, so people are hearing us, they're seeing stuff. Okay, so guys, if you've got questions, come on. There's got to be some questions. Take this opportunity to ask a question. I assure you it's going to be worthwhile, whatever the question is. I know some of you guys are students of Andre's already, so you've probably asked a lot of questions of him. If you're not, then this is a good chance to do that.
Yeah.
Otherwise, maybe I can ask some questions, and we can.
Yeah, you can do that. We can go over to TradingView, and I can answer them.
I mean, maybe just talk through one of the trades that you took this week, or even NFP. NFP is quite a good one.
Yeah, I can do that. Let me pull up the chart. Then I'll share my screen. I'll mark it up off. Excuse me.
Hang on, so if I get this right, we've got 1, 2, 3. Can I see everyone in here?
Drawing tools. Anybody got a question? Go ahead and ask.
Bundy.
Describe your
Cam, you
optimize.
must be getting sick of people messaging you on Discord, accidentally meaning to message me.
Okay, I got a couple questions coming in. First one is from Farzad. Describe your procedure when optimizing a strategy so that not to overfit a specific or even past that might not happen in the future. So optimizing my strategy. Okay, so let's do here. Let me pull up a screen here. Right here. All right. Can you guys see TradingView or my desktop? I don't know which one you guys can see.
We can see TradingView.
Sweet. Okay. So how do I optimize a strategy? It's really it really comes down to the data that is on the chart, right? And what does that really mean? That really means, what is the market's perspective? What is the market looking for? My understanding that price is always pushing to the less liquid side of the market. So for instance, let's go here. Now, you don't need volume profile to trade. I have actually moved a little bit away from it because I know how to see it with the naked eye now, and it keeps more stuff off of my chart. So let's go with session volume. Oh, they changed the colors. Oh, so the basis of any price, of any market, of any kind, is the fact that price is always pushing to the less liquid side of the market. So it's a fact. Drives higher are looking to find sellers, drives lower are looking to find buyers. Where is it likely to find it at? We don't know, right? So how do you optimize that? You want, best way to put this, you want your entries to be around areas where sellers clearly have power, right? You also want your entries to be, for me personally, I want my entries to be as close to the top as I humanly possibly can get, or close to the bottom as I humanly possibly can get. Well, why would I want that? I don't like drawdown. Hate it. It's stupid. Why would you enter in a trade, have to sit through 20, 30 pips of drawdown, and then when price goes like a few pips in your favor, you close out the trade? Makes no sense, right? So one thing you have to really, really, really get into is the market's trapped at the time in order for it to find what it's looking for. Or time equals volume, volume equals time, right? I see a high volume that trading view is not picking up here. So those lines are really awkward color. Hold on, we'll make them darker.
They're not too bad. I can see them quite clearly.
Okay, cool. As long as you can see it, I'm happy with it. For the majority of this week, I was long cable, and anyone in my group can attest to that. I don't pull anything out of my behind. I will always be upfront and honest with you. I was long cable. My bias for cable was long, very, very, very long. But why? The fact that when we gap lower, right? Let's go to our chart. We gap lower, and where are we in? We're in buying territory at this point. So my bias for cable for the week was long. Entries, I posted entries in my group. I can tell you right now that I caught this bottom here. But why did I trade long here? It's also knowledge of when the market's actual search for liquidity is going to happen, right? You have to be able to know when to stay out the market, when to get into the market. There's very specific times that the market's going to search for the best bid or the best offer. You have to be able to optimize time in order to optimize entry to get the best entry with the least drawdown. I hope that answers your question. But that's really my procedure. I'm waiting for the market's auction process to start. I'm waiting for the market to find what it's actually looking for, be it a top or a bottom. There's very specific prices that the market likes to do with it. I can't show just out of respect for my students. Very, 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 and I mean very, very, extremely specific prices that the market will stop at. And I say will with conviction, because it will stop there. And that's where you look to do business at. There was a very specific reason why the market stopped right here. And I got in literally like right here. And I rode it. I rode it up to the gap fill. Then I expected.
Is that?
I don't even know. I don't even know. I didn't care. I don't care about pips. I care about percentage. If that makes any sense. Pips I can care less about. My goal on an average day is 5%. It's relatively simple to do, but a lot of days you can do more, you can do less, right? But yeah, it was a very good trade to say the least. So I hope that answers your question, Farzad. All right, what is the easiest way to learn volume? I just don't get it. You know why you don't get it, Peter, is because there's a lot of bull crap about volume out there. You can't tell volume in FX. That's bull crap. That's absolute bull crap. Cam, if the volume profile you look at, no, I have one for MT4 that I do give to my students. So you can use it on MT4 as well, Cam.
And the one on MT4, I've got to say that Andre uses is phenomenal.
Yeah, there's a few. I can recommend some paid ones for you.
Crazy.
Yeah, I can recommend some paid ones for you. Any profile is really, really good. It's a paid version of volume profile. I think it's one of the best out there. So back to your question, to learn volume. I think you have to take everything that you know about volume and kind of flip it on its head. Because volume can be very, very manipulated. Very. And I'm not saying manipulated in the sense of they want to fool you, because again, they don't give a crap about you, right? They don't give a crap about me. We don't move the market. We just literally don't move the market, right? They're trying to really compete against the bigger players and some mutual funds, right? Because mutual funds can only play one side of the market. So they're always open. The risk is always exposed, right? So think about the market from a logical perspective. You can see a move happening that's very weak, but the volume in a traditional volume looks very strong. You get on the next bar and you get chopped off the market, right? So I think you have to analyze price movement with volume on your chart. You can, if you have an ECN, use their volume, because their volume is kind of going to be the closest thing that you'll get to some real traditional volume in a sense. But the easiest way is to probably download a volume profile indicator for whatever software you're using, put it on your charts, and unbiasedly observe it, right? Take your bias out of it. Just look at charts, stare at charts, right? So you're blue in the freaking face. Or use regular traditional volumes. Observe market tops, market bottoms, and how the volume reacts. So there, also observe the spread. But I think time is the missing link to even traditional volume. So just keep that in mind. Price is attracted to time. Time equals volume. Price also creates volume as much as time creates volume, and vice versa. So it's a win-win kind of a relationship there. Thanks. I understand your approach. However, my question was more systematic trading perspective, optimizing historical data. I'm very discretionary. I'm less systematic, Farzad. What do I mean? Because the market's dynamic. So my systematic approach is I wait for the market's auction process. I wait for when the market auction typically will end, and then I get in. Right. That's how systematic I am, and it's not very systematic. It's discretionary. Just like I don't use traditional risk to rewards like 2-to-1, 1-to-2s, 1-to-3 setups. I think they're traps. So I'm very, very discretionary because again, I'm not the volume, but the market's very discretionary. They evaluate anything, currencies, stocks, commodities, metals. They're two things. They're either overvalued or undervalued, right? And they're either overvalued or undervalued at specific prices, right? And if you know how to spot those prices, then and only then do I want to get into marketing and engage in price. When you're looking from a historic perspective in data, you have to look at it from the perspective that nothing's random. Nothing's random. Certain prices are used over and over and over and over and over and over and over again. Even back out to the 1950s. You can, if you find historical data on that, you'll literally see even Brexit stopped at a level that MT4 doesn't go back far enough to do. I think Brexit stopped at like a level from 1970-ish or something. And it was a clear level where they were bidding up the market. So that's how systematic I am. I'm looking at specific prices and I'm engaging in either a long or short based off the valuation at prices, because that's literally how it's done on the inside. They value stuff at specific prices.
It's interesting, because I think, Farzad makes a good point in terms of, I suppose, the going back and looking at stuff over years and years of data to try and determine a strategy that's going to be successful going forward is the method that's sort of taught out there in the industry. Yet you're very much sort of like, you'll go in and, actually maybe give the guys some insight into how many years actually are you going back when you're coming up with something that works? Like how much data are you actually looking at? And when do you sort of know that, okay, I've got something that is good, I can rely on this going forward? How much do you need to see? Is it like years, or are you just happy with months? What does it depend on the time frame?
Years, because I found data that goes back to 1953, right? From cable's all-time high,
yeah,
Euro's all-time high. and the behavior of the market hasn't changed. It literally hasn't changed. So something that you can attest to too is my trading approach has changed. It's gotten better over the last year, because when I take the non-biased look at the data, I'm like, oh, this was hidden right in front of my face the whole time, right? And then it becomes a little bit easier. So if you understand that the behavior of price hasn't changed over the course of since FX data started becoming available, I'm 100% confident that I can go back in time and probably one of the greatest traders in the freaking world, just because of the things that I know now. Because it literally stands the test of time. Even my old strategy, where I was using mainly rejection, and the mistake that I made with my old strategy was it was more strategy than it was market behavior. But I was just using areas of rejection. But even when I took those area rejections back to that data that goes back to 1950, it was still valid. So I hope that makes sense, and I hope that answers the question. I don't want to dance around the question. I want to answer it.
Yeah.
But yeah.
Yes, yeah, it makes it so. I suppose like putting it into like how I sort of think about it. So you might, for example, like test something on recent data, and then go back and test the same theory on data that was happening years and years and years ago.
Older data
Yeah,
first.
older data first, is it? And then come forward and then test on that. Okay.
Yeah,
So in theory, I mean, what are the main changes you see between older data and the newer data? Is it more just the ranges? Price will range, or the liquidity?
As Forex has gotten more liquid, the ranges decrease, right? So
Yeah.
if you look at a pair, look at a pair like AJ, GJ, Jappy, any of the yen pairs, right? They have very, very big ranges, right? Well, why do they have big ranges? They're less liquid. Look at the euro. Look at cable, right? The move on euro, one of the moves on euro this week was like 30 pips, and the move on cable was like 60 or 70 that I was able to catch. Well, why? Because since euro's more liquid, it can't move as far, right? Cables, not saying that cable's illiquid. No, by no means is it illiquid, but it's less liquid than euro, so it has bigger ranges, and that could be Brexit or whatever. I don't know. But then you look at a pair like GJ. Well, why does GJ have roughly like an 80 to 90 pip range a day? It's less liquid, right? Price has to go further than a major pair to find what it needs, right? So that understanding should take you farther. That's why people say stay away from crosses. You don't need to. If you understand market data, you don't need to stay away from anything. You literally don't. Like, I've been trading freaking soybeans on my computer, like, and it's still the same. Yeah, the education's bullcrap. How would you classify your trading strategy? Are you using your own strategy? So, I would classify myself as pure price. Pure price. Looking at some very specific prices, and when I mean specific, I literally mean very specific prices. And determining value, long or short, short or long. I'm very discretionary, but I'm kind of systematic. I don't know how I would classify it. I use one strategy. It's just straight price. I'm looking at a drive into a level. I'm looking at market highs, market lows. I'm pure price, pure price. In my opinion, it's the only way to trade, because even volume profile is in its way a weakness, because you can get trapped. Because why? Anything on your chart that's not price takes your attention away, right, from price. So moving averages, Fibonacci, even volume profile, even traditional volume, right? All the dang indicators out there, they take your attention away from the one thing that you should be looking at, price, right? When you look at price is the only thing that matters. I would say I'm just a straight price trader. Sorry, I missed the name of the volume profile indicator. It's called Any Profile. Email me, Andre at chartartisttrading.com, and I'll show you some screenshots of it and see if it can be helpful for you. Price moves with, well, volume profile will move with price. That's the thing with volume profile. It will move, literally moves with price, and you'll literally see the market moving and volume moving at the same time into an area of volume. So yeah, it moves with it, if that makes any sense. But again, hey, you're welcome. But again, it's easy to see volume profile without price anyway.
Yes, and I think, I mean, I can test what you're saying in terms of, like, the stuff that you've taught me over the last few months or however long it's been, a year. It takes everyone sort of, you learn these new things and it's like, oh great, I'm going to jump on this indicator, or I'm jumping on the volume indicator, and you typically give too much attention to the indicator and not enough attention to price. At the somebody must be off mute. You typically start to go, right, I've got a new indicator that I can use, and I'm going to jump on there and base my trades based purely on that, and it doesn't work because you're ignoring price. So yeah, I think, I suppose, without going into detail, it's very much for you, Andre, price. If you watch the charts, stare at the charts, learn price action and in its purest sense, like what's actually happening, as opposed to what somebody's taught you in methodology, you will start to see what's going on. I mean, like I'm getting, like personally, I'm sort of getting to the point now where, like, when I see a setup, I just know that that's a good setup, versus what in the past I would be a bit sort of like, well, I don't really know. Is it good or not? Now I'm sort of like going, I can look at it. I don't know if it's going to go either way. And then I can look at it and go, I know it's going to be a good setup. But it comes with time, eh? You've got to put the chart time in. That's what I found when it comes down to it. It's the chart time.
Shortage. As far as that, some of the highest volumes do not move price much. You know why? Because there's probably a little bit more accumulation that has to go on in that particular area before price can release. And yeah, that's the main reason why. Sometimes price has another objective, so it has to sit in that range, build more volume to either reverse or continue. So yeah, you're absolutely right on that. Is that a trade setting up on Cable's 60-minute chart? The trade setup is here, to be honest with you. And probably even if you, the best trade was here, or start of a new day here for the bounce up. But yeah, don't trade it at the open on Monday your time or Sunday my time. Don't trade it at the open. It's probably going to be a gap, and if it gaps, it's just a function of next best price. Absolutely. Big players also look at trading cost parameters to optimize time to buy or sell, not to move price on their orders. Exactly, too. And the one thing retail education kind of sucks at is patterns, right? When you look at the statistics of patterns, like, good majority of them suck. They don't perform. I think one of the worst ones, to be honest with you, is the engulfing candle. I think that is really, really silly. Because if you get thrown an engulfing candle in the wrong area of price, dude, you're gonna get whipped, like chopped out, like you're gonna get whipped out, dude. Like the engulfing candle pattern is stupid. It makes no sense. And again, there's no real training on price trading for a reason. Like it's not out there for a reason. And even if you track back education, you'll see that education has its roots in brokers and institutions. So get excited about that crap. Dewey, go ahead and type your question in the chat box. I see you have your hand raised. And I'm not ignoring you. I promise. I promise. I promise. I'm not ignoring you.
I can't see where to type it in.
Son of a monkey. Go ahead and ask. You're unmuted. Go for it. I think you're unmuted. Can you hear me? Quite possible.
He's muted now. He's muted now.
I thought he was on. Oh, unmute.
He was unmuted.
Dewey, you're not muted. Sorry, I can't read.
Oh, can you hear me now?
I can hear you.
Hey, I wonder if you could just tell us a little bit more about the auctions and what time they are and how many they are in a 24-hour period and what you're looking for during those auctions.
Like options, like actual options trading?
The auctions.
Oh, auctions. Sorry, see, I also can't hear. Okay. The auction. They happen at very specific times. And I really want for you guys to kind of try to figure that out on your own. But I'll give you a hint. Opens, closes is when they happen. The market will reprice. That's really it. Opens and closes. Auctions happen on a daily, weekly, monthly basis. You just got to know when. If you're in my group, I dropped a video today in the drive for you. So it'll answer that very, very specific question on when the auctions actually happen. They're very specific, usually around opens and closes. And price will search for literally the best price and volume at the best price. And then the market moves. Like this right here. You get this big convincing move that, hey, we're going to continue to the upside, right? But we get into weakness in the bids, right? Weakness in the bids. What do you think is going to happen? These prices are too expensive, right? So if you're an institution and you're evaluating everything, right? It becomes very expensive to buy up here. So what are you going to do? You're going to wait for a cheaper price, which means the market has to fall.
Yeah.
Literally has to fall. And then you reconvene around lows, right? It's just like anything, right? Like me, I'm really, really cheap. Like I'm extremely cheap. I buy my shoes on sale. I shop at Target and I shop at Walmart, right? I'm really cheap because why would I pay, let's say, $60 for a shirt when I can go to Walmart and get another Superman shirt for $7.50, right? And I can get like 5 of them and not even care, right? Like that's how you got to think about the markets, right? I recently pulled out of a house offer because, again, looking at the current market, it was just too freaking expensive. So what am I going to do? I'm going to wait till winter when prices go down, and I can control more or less the price I get. Anything, right? When things are too expensive, what do? You wait till they come down, or you go somewhere else that has them cheaper. Trading's no different because it's typically price. It's price. So essentially, it's always around the opens, closes. You'll see the auction happening. Again, there's a multiple in the day. And again, I just gave you a big hint, opens and closes. So, have you ever compared the movement of a Forex pair?
Actually, wait, before you move on to that question, Andre, so I mean, when I was just thinking about it then, I was like, so basically, I mean, if you think about it, I mean, I bought some currency, funnily enough, actual currency, just the other day when my wife was heading off to the UK, so I was like, had to buy some pounds, and I mean, I was like, looking at I looked at the price, looked at where the market was, and thought, is it going to go lower? Is it going to? I mean, basically, I want the best price, right? I wanted the best price. Now, that's me wanting pounds. So, how do you translate that in your head to the actual? So, I wasn't going to move the market with my £1,000 that I bought, but the bank that I was buying it from obviously could. ANZ Bank could be, well, they will be moving the market at some point. Right. And so the question is, how do you relate that back to who wants the best price? So, for example, like there's all these big institutions around there in the world, and they're all trading the same market, but some of them are wanting pounds, and in this case, some of them are wanting US dollars. So how do you know that? How do you know which ones are winning? Which ones are gonna basically say that price is too expensive versus that price?
I think too, you have to accept the fact that you can't move the market, right? Which you said, right? You don't set the prices, right? You literally have to look at a chart and say, where was it deemed too expensive? Where was it deemed kind of cheap? Right? The data is all there. Like it's all on the chart, like literally for you to see, for you to dissect it and determine it. I recently had to buy euros. And I waited, I put it off to the last minute, and I got a really good price. Granted, the bank did front run me a little bit, and I got on them about that because they don't, they don't know what I do for a living, right? But they ended up giving me a better price on the euros that I needed. It's going to come down to the judgment of the institutions, but you gotta also remember too, if you're around market highs, it's not the best place to buy. If you're around market lows, it's not the best place to sell. Why? Because if you want to sell out of a low, you either need a crap ton of buyers at that low trying to push the market up, and you're going to have way more money to push the market down against their buys, right? Well, what makes more sense? The market's going to follow the path of least resistance, right? It will shoot up to shoot down. But that probably doesn't answer your question, does it?
Well, I think it's a difficult question to answer because it's like, I mean, you don't know which institutions are wanting to buy which.
Yeah, and it doesn't matter. It doesn't matter.
Yeah, I suppose what you're saying is it doesn't matter. Yeah. It's where prices in the past, which deems whether or not that was expensive or cheap.
You just look at where they made decisions in the past on the chart.
Yeah.
See, the beautiful thing about the candlestick chart, it's not widely accepted in institutions, right? They're doing their complex mathematical crap, right? That's fine. You don't need all that, right? What do you need? You need an unbiased eye and a price chart, because everything that they do from ice orders.
Robin's got some kids joining him.
It's okay. They can be traders too. I'm excited. My kids are like, "Hey, are you trading?" So yeah, that's exciting. I lost my train of thought, Cam.
Oh, yeah, so did I, mate. So did I.
Yeah, well, can anyone remind me what I was saying? What was I saying?
Someone want to type it in the chat box?
Good Lord. Yeah, that's what happens when you have kids.
It's just like,
attention gets pulled like 13 different ways all the time.
Yeah.
Like, what was I doing?
Well, there's a question in the chat box anyway from Rich.
Rich, have you ever compared the movement of a forex pair while watching corresponding futures? I did, but again, got it. Thank you. I'll get back to it. I did roughly about a year ago, actually, right around September last year, because I met a really extremely good trader. And that's what he did. He goes, you should look at options. You should look at this and that. So I went out and bought a whole nother computer, right? Because I trade on Mac, so I had to go get Windows. Went out same day, bought a whole new Windows setup. Excited. I downloaded all this new crap, this new software, and I got pissed. Why did I get pissed? Because I know how to do it on a price chart. And the thing with the futures data too is they spoof, right? You'll see a big bid come in or a big offer. The market will literally tick to fill that big bid or big offer. And what do? They pull it, and then the market whips back, and you're just like, oh my God, why, right? And the crap about spoofing is it's illegal for retail traders to do it, but it's legal for funds to do it. Stupid. Very, very stupid. It's unnecessary. You don't need it. There are going to be some people that say it brings transparency. Okay, that's cool. But the one thing that you can literally see on a candlestick chart is human behavior. You can't see that with like depth of market, Delta. Right? Delta can be a good tool, but the thing with Delta is Delta measures market orders, right? Some people think Delta is the holy grail, but really market orders don't move the market. Limit orders do, right? So what happens when Delta runs into volume, actual volume? Market's going to reverse. So market orders are typically matched up with limit orders. That's probably a bit much for this conversation, but that's why I don't look at it anymore, because it's too much. And then they just nickel and dime you for data. Like, screw that. Like, this business is all about money. Rich, I found the same, but real volume was important as in Forex. We only see our own retail volume. Rich, yeah, I see where you're coming from, but again, volume can be fake too. Volume can literally be faked too, and I've seen it. So yeah, volume can be faked too. What do you? Let me second part of his question. Do you think you? What do you think? What you're right? Oh, do I think what I see is real volume? In one of the conversations I had with one of my mentors, who is a legitimate former hedge fund manager, well, not manager, trader, and he runs a prop firm, you don't need it. Price is attracted to time, and you'll see time on your charts. Price and time equal volume, right? So yeah, again, it's just really overcomplicated. And it doesn't matter if the volume's real or not, right? All you need to be concerned about is, are they buying here or are they selling here? Then volume will follow, right? Because volume doesn't just come straight in, right? Volume will follow, right? So,
hey, Andre, looks like I just noticed that Jasen Baker, who's an ex-guest of the show, is actually here. So he was the one that posted that reminder of.
Oh, dude, great! That's exciting.
Jason, do you want to come on and say hello?
You can totally hop on. I love talking to other traders.
So actually, he's one of the rare people that I've actually met who's been on the show. Actually, the only person who's been a guest on the show that I've met. We had dinner. He bought me dinner out here in Wellington. One of his trips with Google.
Oh, he had one of the best interviews. Yeah, he worked for Google, right?
Yeah.
I love that interview.
Do you want to unmute him? I can say, there we go. How's it going, fella?
I loved your interview. I remember what I was doing. I was struggling really hard in this market. I was driving home. I was literally like 3 streets away from my house. I was like, this guy is good. I totally remember that interview, man. It's good to meet you.
Likewise. Can you guys hear me okay?
Yeah.
Yeah, fine.
The right mic on.
How's Sydney treating you?
Oh my God, I don't know how anybody leaves this country. This is awesome. I always told people, I'm like, yeah, this is Jasen Baker with a B12 trader. Yeah, I was hoping to kind of pick up the accent and everything. That'd be great.
I tried it, but yeah, it's just an epic failure when I try to pick up the accent. It's just horrible.
I just feel like a fraud, when I say it, but it sounds awesome. I'm like, oh, go ahead, just say my name over and over. So I didn't want to hijack. I'm kind of fascinated with this. I've been doing a lot of data analysis and data mining, obviously now being at Google. I've been buying some data sets and trying to validate a lot of kind of what we talk about as instructors. I wanted to always do that Mythbusters, right? There's so much perception that you can see on the chart. How do we validate that mathematically? Of our years of experience, do we really get reversals at this many candle charts that many times? And I just did that data over all the ETF data. It took 2 days to run, but I actually have that kind of some interesting insights there. So I can share with you guys offline.
Definitely.
Chat about it.
I'll send you my email address, and I want to pick your brain.
Yeah, I love kind of, how do we transform, this kind of trading education, right? From looking at the chart, which looks like a bunch of squiggly lines, to kind of saying, hey, are there patterns that we don't see as humans? We know that patterns exist. How can we validate this numerically? So this way we can kind of do that Mythbusters and say, you know what, if I just hold out for this particular pattern, I know statistically, and I can give you that number. Nobody ever seems to have those stats. I always hated that myself, was our intuition. It's very hard to kind of relay to other people, but if I can tell you, guess what, over the last 20 years, this is a 38% chance of reversal, and I'm going to take it.
I agree. Just like patterns are
Fascinating stuff, eh?
just like when you look at the traditional retail pattern and you can find it online, like they suck.
Yeah.
Like they suck hardcore. There's one reversal pattern that I think it was like it was the high 80s. It was the high 80s in terms of actual reversal. I don't use it, but I found in my own price analysis, it always, always, always happens at key prices. Like always. And that's why I don't look for patterns. I look for price because I know when you reverse engineer the market, it's all about price. So a specific pattern will happen at a specific price. And there you go, right? This is why I don't agree with I don't want to say agree with, I don't follow the traditional retail thing, or you have to learn this method here, this method here. Granted, okay, if your method is logical and it works, do you want to know why it works? Right? Break your
So
method.
then you know why it's failing.
Right. The price. It always, for me, it always comes back to the actual price. So yeah, that's what I do. I literally just analyze price and the behavior at the price. And
Yeah, it's a reflection of human emotion. I've always told people that at this price, think about it. You're either trying to protect your investment or you're capitalizing on the one that you've already made.
Yeah.
And you can see that it's for resistance levels that we're historically at. But the real trick that I think the Panacea is trying to say is, what about that no man's land in between? We know about all these extremes. I'm selling off, I'm selling into buyers of the hype, and I'm buying in where I think there's good opportunity. Because, you know, institutions are trading currency as a result of a need to either hedge, offset, or recapitalize. End of quarter, they want to make everything look good. So it'd be kind of interesting to see if we can see those correlated patterns in institutional decision making. Because you're right, it is just a bunch of emotional reaction. But how can we turn this into something a little bit more visible?
Right.
But like you said, it takes you, how do we shorten those years of experience that you have in seeing, man, I've seen at $80, obviously people here are selling off. They must feel that it's not going to go much higher. The price reflects that, or you're going to see support coming in at certain levels. And it'd be just kind of neat to trace back the genesis as to why. So then we understand when we might be getting faked out, even if we can improve that percentage of success just a little bit with some knowledge.
Yeah.
So that's where I've been in the trenches trying to get to that point.
Yeah. Are you still fully focused on ETFs, or have you moved on to other things and tested this across different instruments?
So I started with ETFs because I have the most visual historical experience. The big one when I talked about Keltner channels, especially around junior gold miners or any of the leverage ETFs or the gold miner ETFs, I did find, and I can show you guys, I'll show you guys offline, the statistical reversal pattern based on a Keltner channel was extremely high. It was in almost the 38th percentile. 38% of the time it will reverse after it hits those levels of extremes, which is like, okay, so that validates kind of what we've been seeing. And there are many different indicators you could have used to do that. A lot of people, maybe it's a MACD or maybe it's an oscillator, or it might be, in my case, the Keltner channels could be support and resistance. They all kind of come together. But now that I have this, I'm just going to go and buy the whole data set for the entire stock market. It's a pretty good capital investment. But now that I've created the formulas, now I have to go and run the data. So it was just funny that my ETF one just finished last night. So
Wow, that's pretty cool. I'd be interested to see what you think about what I do and the data behind that. So we'll talk offline on that because
would love to. Yeah, I think what you're doing here is fantastic. And my whole goal, even just as a trader, one, I want to be the best I can. But how do we get so many of these people that listen to Cam stuff, and it's more than just entertaining, but how do we give them the nuggets, that formulaic thought process? It should be nice if it didn't take 5 years to figure out whether we're good at what we do.
Right.
Yeah.
And it's amazing too. Like I literally equate being a trader almost to being an athlete, right?
Yeah.
Because it takes that same kind of drive and determination and that self-improvement to really get there, right? Like I had a student tell me like, dude, you literally crammed 10 to 12 years of chart time into 6 months. I'm like, yeah, I did. I literally sat here, I slept here, I would be passed out like this in my chair, and my wife would come out the room and say, get your ass in bed right now. Like, that's how much I want to be the best at what I do. Like, I think granted, you don't have to go to that level of extreme that I do, but I mean, just being someone who loves competing and loves athletics, I want to. So, yeah.
It's funny. Sometimes that obsessiveness is intimidating to people, and I'd love if we can take that away from the retail trader. You know how well, at least the U.S. government came up with the food pyramid. What if you did something like the stock pyramid? You
Right.
have these guidelines and best practices with valid data. So when they say people say this, it's not just some talking head who's trying to sell an educational series, but it's somebody who's, a group of individuals have done the research and kind of can shortcut certain situations to say statistically, this is going to be to your advantage as the retail trader.
Mm-hmm.
I'd love to kind of remove that barrier to entry because this looks intimidating. I mean, to us, we geek out on this all day, but it didn't happen overnight.
No, definitely. It was a lot of loss to get to a point to where it's normal behavior, right? It's literally just like training to win over and over and over. Like I tell my students, dude, it's literally you work your butt off 5 to 6 to 8 hours a day on the charts to perform for what, an hour or two? Like that's really what it is, and it's like a sport to me. I'm glad
it's like a professional athlete, isn't it? It's crazy.
Yeah,
so much like a pro athlete.
I tell a couple of my students that I have a couple of friends that are professional athletes. Two basketball, one football, and it's the same thing. Like he did it because 1, he loved it. 2, he's competitive, and 3, it's just that passion. Like granted, I don't play sports no more, but I'm in the gym like consistently, and when I'm in the gym, I'm like, okay, I hate cardio, so what did I do? I found a way to compete against myself to make myself like cardio, right? And so every time I get in there, I'm like, okay, I got to do this just a little bit faster, right? And that's how you end up getting better. Just tweak it to your liking. I don't know. I could talk about this crap all day long.
And the thing is, it doesn't make a lot of sense to everyday human beings where it's, it's like, just give me the formula. All you're doing is you're entering at a point and you're exiting. It's very simple, isn't it? It's like, just tell me when to enter and tell me when to exit and tell me when to get out if I'm wrong.
Yeah.
But what I've learned is purely from a manual point of view, and even just trying to get markets in general, it's about a subconscious thing, which sounds a bit weird and flaky, but it's, subconscious. If you're going to, subconsciously sort of learning so much that you start to understand what's going on. Because it isn't a 1, 2, 3, you're away. It's more like a sort of 1 to 10. If you know these 10 things, you can have a much higher probability than just knowing 2 or 3 things, which is why everyone gets taught. You get taught, okay, if it's above this moving average and price has done this pattern, then you can enter here and put your stop loss here and you take profit there. But the reality is there's so much more to it if you want to have a high probability strategy.
Right.
That's what I found anyway.
You have to ask yourself, is this moving average a part of the market? It's not, right? Right, it's not. And that's why statistically some of them just, the crosses and all that don't work, right? It's quote unquote pseudo support and resistance. They look great in hindsight, right? Look very good in hindsight because the moving average has to move after price has made its move. So if you want to edge, get rid of the moving average, right? Go back and look at why price moved at a certain price, non-biasedly, no bias, literally no bias. I've told a couple of my students about this female trader that I know who's currently up 100,000% on the year.
What?
Well, she was at 60 when I told people. She's at 100 now. I have her information. I just can't share it.
Actually, you've sent me. I think I've seen a screenshot of one of the trades.
Yeah, and it's just
I believe it.
amazing at what she does, right? I totally forgot why I was telling the story, but I found out that we trade the same way. She just has a lot more money than I do. Right?
She's got a higher daily percentage target by the sounds of it.
Yeah. With the lot sizes that she trades, she makes a killing, right? But again, I went back and I looked at the entries because I communicate back and forth with her. Like I look at her entries, and I'm like, oh, she took the same trade I did. There's been several instances that her and I have taken the same trade. She just makes more money than I do, right? That just tells me I've gotten way closer to actuality versus some made up bullcrap strategy that's going to be gone in 3 months, right? Because you hear it all the time. Some people, I'm not going to bust anybody out because God knows I want to. There's a certain group of traders had a great one, smashed out of the park. But once that particular segment of the market was done, they're not making any money, right? And it's like, okay, you saw and you exploited your edge, right? But you didn't adapt your edge to current market conditions, right? Just like most retail traders have a hard time telling a trend versus a range, right? And they tend to get chopped out of the range just because they don't understand, right? Like two things. If you see a double top and a double bottom, right? They're there for a reason, right? The double top's there for a reason, double bottom there's for a reason. But if it's constantly hitting a top and it's constantly hitting a bottom, you have a range. Hold on. Is he okay?
I don't know.
They got literally hit by an 18-wheeler.
A big truck.
Okay. Guys, I gotta go.
Okay.
Hold on.
Let me call him and see if he's okay. He's high.
Sounds like a bit of drama here, guys.
Hold on.
Gotta go, mate. Gotta go. I'll finish up and we'll with Jason here anyway. So thanks a lot, mate. If you've got to go, you got to go.
That's kind of cool to see that caught on straight video, huh?
So why didn't somebody?
I think how could I do that? Cam, I'll send you my my Zoom login here, and then you can just use that.
Oh, because you've got a meeting, haven't you?
I might not be able to. I might not have to leave.
Okay, guys. Hey, look, I think we're on the hour mark anyway, so we'll probably wrap up here. I think it's been
fine. They're fine. They don't have to go to the hospital. They're fine.
okay. Cool.
Well, I mean, anybody else have any questions? Any?
Actually, sorry, what you were saying before reminded me of there was one interview I did on the show that never aired because the guy I just decided not to go ahead, and I won't say who it was, but similar thing. He came up with a strategy. It worked well for 2 years, but that was as soon as that 2 years period ended, it just died. And prior to that, and he hadn't tested prior to the 2 years that he started doing it, he retested the strategy on the prior market and realized it didn't actually work before that either. It only worked for a 2 year period, and then outside of when it died, and then before that, it didn't work either. So he must have tested like a month's worth of data and or a very short period of data and gone, oh, this is great strategy, it works. Played it out, worked for 2 years, and just stopped.
You know what, too? Like most fly-by-night systems only work in trending markets. That's what you'll probably find. If the market, like a cow can press buy or sell and make money, right? Like most systems that do that only work in trending markets, and that was the downturn with this particular group. They had a phenomenal system for a trending market, but once the market got back into range, a lot of people lost a lot of money. I'll just say that. A lot of people lost a lot of money. It sucks, right? But then your goal as a trader should be longevity, right? Like it has to be, right? Because this is something I'm going to teach my kids. Hopefully their kids teach their kids and keep it going, right? Keep it going. It has to be that kind of a thing. Long-term stability. That's what any trader should be after, and just adapting. So.
And if your kids want to learn, great. My kids are not interested at the moment. They're like,
I'm thoroughly convinced that my son's going to be a good trader because he literally would sit here with me before he started school, and yeah.
He's been there, hasn't he? Yeah, he's been there through the thick and thin. I remember him in the early days. Well, last year. Up with you in the middle of the night. Right, guys. Any more questions before we wrap up here today? I think it's been absolutely fantastic and great to get Jason on as well.
That's a surprise, man.
Yeah, who I haven't seen for.
Pleasure meeting you, Andre.
Same here.
Did you, Jason? Did you meet Troy in the end? Because I know Troy Bombardier. I sent you an email and him an email. I don't know if you guys caught up.
No, I've been having too much travel. I'll have to chat with you about it offline. Since moving to Australia, I've seen more outside of Australia than Australia, it seems like. So Asia's a big place. Let's just say that.
Yeah, I can imagine. Yeah. Okay. Well, look. I mean, if I mean, he's in Sydney. You're in Sydney. If you guys can catch up, that'd be fantastic. Young guy. His interview was crazy. It was weird. Very weird because he started this site which was very popular, and people thought he was like a sort of 31-year-old trader who'd had all this experience. In actual fact, he was 22, or maybe even younger, and he'd been trading since he was 12, and his mum owned a hedge fund, and then completely alienated him from the family and destroyed his life, sort of thing. And that's why he ended up going to Australia. But his knowledge of the market from a fundamental point of view is unreal, like absolutely out of this world. So hopefully you can catch up with him, Jason. Look, great to see you again, and no doubt if you're in New Zealand, we'll catch up for a pint or whatever.
I wanted to talk to you about that. Looking at something in November. So.
Oh, superb, brilliant.
That's my wife.
Bye.
Long time no
Okay.
see.
Yeah, I know it's been a while, hasn't it? We've got a few others on here with us, but that's all right. Good to see you again.
You're gonna
Good
be
seeing you.
on the internet. Get excited.
Oh, why didn't you?
She didn't realise that it was the internet. Just as well shouldn't say anything weird. Look, thanks very much, Andre, and thanks, Jason, and everyone else who.
Man, well, let's talk soon.
Yeah, cool. And everyone else who's come on to have a look at this. I know that it wasn't a cast of thousands, but I think it's
Quantity, man.
it's a good start. And look, it's a change in everything here. It's no longer 52 traders; it's now Trading Nut. So, check out the interview with Andre that we've just done. It's fantastic, and the ones going forward are all free again. So enjoy that. All right, mate. Look, Lee, let's end this meeting, and we will we'll talk to you offline. And everyone else, have a great day.
All right, guys. Take care. Nice
See
to
you
meet
guys. Likewise, bud.